So you can tell us what are the different fee structures that are prevalent in the market. Typically, what kind of fees do people pay or advisors charge? Just break it down, give us a little more details for people to understand. What is the fee, what is the value add, what models are there.
So as I said, various kinds of fee structures, right? Starting from an absolute fixed amount. Someone could be charging 10,000, 20,000, 30,000, 1 lakh, whatever that number is.
So that's 1 lakh per year, irrespective of the portfolio size.
No, it depends. So there are people who would charge you one time for advice, and then if you go back for a review or a rebalancing or an exercise like that, there would be a different amount involved. Sometimes it is lesser, sometimes it is more. Again, it works advisor to advisor. It's different. The advisors, and typically they would be stock advisors who would charge you a fixed percentage basis, right? A 1% or a 2%. Sometimes they vary it based on the amount of the portfolio that you are running with them. Up to 1 crore a certain amount, or up to 5 crores a certain amount of fees, and beyond that a different slab kicks in. If you were to look at the advisory profession, what are the things people are doing? Advisors are offering a service like financial planning, which is about building a financial plan, right? Helping you identify where do you stand in terms of your money, where are the key gaps and how they need to be addressed, what are the key actions that will work for you. That kind of exercise, if done by a financial planner who identifies himself or herself as a financial planner, will be typically done at a fixed fee cost. And again, as I said, that fixed fee could be 30, 40, 50, 1 lakh, depending upon probably the complexity of the plan or something else. And then there are others who would want to engage clients on an ongoing basis. It's not a one-time exercise, an ongoing basis, because a financial plan is not something which you do once and forget about it. You have to keep it alive. You have to keep reviewing it. You have to keep making modifications based on how circumstances have changed, how maybe cash flows have changed, or markets have changed, or your requirements have changed. Accordingly, the financial plans have to be modified, right? And not just the financial plans, but underlying investments also have to be tailored to align with that plan. And that results in an ongoing advisory for investors. And there are advisors who would offer this, and they would charge an ongoing fee for an exercise like this. So you could have done a one-time fixed fee, absolute amount based financial plan, but then an ongoing thing could come for a percentage basis, right? It could be 0.5% per year, 1% per year, 2% per year, under the limits set by SEBI, the regulator. And as I said, then there's a third category which is very product focused, which is a stock advisor. And a stock advisors typically work on a percentage based model. It could be 1%, 2%, 2.5%. That's how typically it is.
So what fees do the mutual fund distributors charge?
Mutual fund distributors don't charge any fees. Mutual fund distributors get a commission from the investments you make through them, which is paid to them directly from your funds by the mutual fund companies.
So who pays the fees? I don't pay the fees, right?
No, you don't cut a check and pay a fee. When you made your investment of 100 rupees, probably a 50 paise or 1 rupee will be taken and paid to the the distributor. And it doesn't happen one time. As long as you're invested through that distributor's code, right, the fee will keep going. The commissions will keep going.
Elaborate this a little. Suppose I have investments of say 10 lakhs, right, in mutual funds, say 3 or 4 different mutual funds. What is the typical commission structure, typical for say equity, debt, or if you could just...
So if you are invested only in equity funds, the commission payouts could vary from 0.5% to 1.5%, typically. Okay. And on an average, let's say about 0.75%.
Okay.
For equity funds. If there are debt funds or liquid funds, the payouts could be 0.1, 0.2, 0.3, something like that. For more, for debt funds on the riskier side, right, or long-dated funds, it could sometimes even 0.5% as well. So, but typically most investors are investing in both equity and debt funds. So if I were to put a number, an average investor ends up shelling out between 0.5% to 1% every year from their portfolio to the distributor. So if a 10 lakh portfolio stands today, you would have paid out about 5 to 10,000 rupees. And if it becomes a 1 crore portfolio, this becomes 50,000 to 1 lakh rupees. That's the range.
So the only difference between a RIA and mutual fund distributor is that I end up paying the fees. The only difference is for mutual funds, the mutual fund company will cut the commission and directly pay the MFD. And here I have to cut a check and pay it to you every year. Is it?
So yeah, that's
more or
on
less,
that's on the fee. That's on the payouts, right? But if you look at a broad picture, the purpose or the job of an RIA is quite different from that of the mutual fund distributor. A mutual fund distributor is focused on giving you mutual funds. You are investing in that instrument. They are distributor of funds. Like there's a distributor of life insurance, there's a distributor of mutual funds. And RIA is bound to take a very holistic view. That's how the regulations have envisaged it. It is imperative and mandatory in a way to understand where the client stands today in terms of their finances. The individual situation has to be completely studied, and based on that and the risk profiles and the current portfolios and cash flows, the right kind of advice has to be offered. In case of mutual fund, you could simply say, you know what, I have 50 lakhs to invest in mutual fund portfolio, please tell me what to do. And the job is done. There's nothing else to do. So it's a big difference. RIAs can go much further. They can also now recommend, if required, to you other kinds of products. They can help you build or maintain an asset allocation. They can indulge you in a very important exercise like estate planning, tax planning, writing a will, ensuring that succession doesn't get any problems. Right? They're willing to engage with you on critical financial decisions. Something like, should I be buying that 3 crore house or that 2 crore house? Okay, how should I fund it? Okay, I've got this ESOP, given to me by my company. Should I subscribe to them? Should I subscribe to them now? Should I sell them? What will be the tax implications? How can I set them off against anything else? Etc. etc. So there's a lot more value add that can be offered by an RIA compared to a pure play mutual fund distributor who's focused on only one thing.